Alrighty, folks. Well, you guys have lots of questions when it comes to fertilizer, so why not go to the source that gets us the best information? I've got James Mitchell from the Crop Management Network joining us here once again. James, welcome back to the show.
Yeah, hi, Ryan. Thanks for having me back.
So there's a lot of, harvest is on the tail end. There's still a few areas that have some acres to take off, but it is on the tail end. We're getting into that, fall application time frame. It was 23 degrees Celsius at our place here yesterday, warm and toasty, but a little bit of fall field work. And I'm just getting bombarded here with fertilizer questions. The urea market seems to have softened a bit. Farmers wondering, what they should be looking at, what they should be doing here with that, entering that planting stage for the 2026 crop. Are you guys kind of seeing lots of action on the retail side? Is it quite busy, picking up every day right now? What's that like?
No, I would say it's definitely quiet right now. We've seen a lot of disinterest from the growers, and that's translated to I think the retail's having a level of disinterest in owning a pile of inventory. So I would say when I look back at other years, we're definitely behind in our buying habit compared to traditional.
Okay. All right. Well, let's talk globally here first. When I messaged you the other day, what caught me by surprise was the latest out of China and urea exports. So why don't you tell us a little bit about what's going on with China right now?
Yeah, China I think they're a wrecking ball right now. They're throwing a lot of curveballs at the industry, whether it's their absence of buying soybeans within the Americas or what they're doing in urea. A year ago, they were totally absent from the urea market. They were producing about 195,000 ton a day and exporting, less than 500,000 tons for the year. Now this year comes around, they're going to export 2 million tons, but now they've extended their export permits a couple of times and they could export up to 4 million tons this year. So that's thrown the industry for a loop. So if you couple that with India's buying habit this year, they've recently announced their final urea tender for the 2025. They're looking for approximately 2 million tons. And I think the world's just waiting to see whether China will abide by their October 15th export permit license, or if they're going to extend it and participate in the final tender of the year.
So from China, from the export side, you said upwards of potentially 4 million ton here of exports this year. Well, what is it like normally in like normal times, if we can even say that? Like, is it 4, 5, 6 million tons normally, or what's the benchmark here?
I don't think you can use the word normal when you talk about China. They've exported up to 10 million tons historically, and a low of 500,000. So, it's kind of like spin the wheel and try to figure out what they're going to do. They're definitely focused on food security for their people, and they want to have affordable fertilizer. And they've been able to keep their fertilizer prices down with exporting this year. So that's why they've continued to exceed their initial 2 million ton target.
Okay. All right. And out of India, from a buying habit, has there been a change recently out of India, or is this kind of standard business that they're doing right now?
A few years ago, India invested a lot into urea infrastructure, and they were going to be self-sufficient on urea, is what they told the market. Well, they've had 7 tenders, I believe, this year. They've had a voracious appetite for urea right now, partly because phosphate's so expensive, and they've been kind of encouraging growers just to apply nitrogen or more nitrogen than phosphate. But they're definitely not self-sufficient, and they've bought a lot of urea this year. I think it'll be over 7 million tons by the end of this tender. Earlier on in the year, they had a heck of a time supplying or securing any urea. That was mostly due to the Israeli-Iran conflict, where we saw prices spike up. And they've been getting more urea as the year progresses. So they should subscribe to 2 million tons this year, which, the market, if you're a seller, you're looking for that outlet to soak up a little bit of global excess at the moment.
So globally, I didn't look at the chart, but just reading that globally, urea value is kind of softening here the last month or so. Is that an accurate statement?
Yeah, Yeah, I think if you want to relate it to NOLA urea barges, we saw NOLA urea barges test 450. I would
Hmm.
say, you could call a range of 375 to 390 for NOLA urea barges today. We're getting a little bit of pressure on prompt urea barges as river close approaches. So that means that by October 6th, they should have all their barges heading north of St. Louis. And
Okay.
by the end of October, urea barges aren't permitted north of St. Louis, which obviously adds a bit of a premium to handling urea because then you're relying on rail and truck to distribute that product versus the barge system, which is by far the most cost effective logistical means of moving product, any product.
Okay. All right. So let's turn our attention here to, Western Canada, to the prairies. What are we seeing from a capacity production standpoint? Is everything firing on all cylinders right now when it comes to producing nitrogen in Western Canada?
No, definitely not. We have Redwater, which is Nutrien's flagship facility, has been down for planned maintenance for several months now. They're looking at restarting at the end of the year. Sorry, at the end of the year, at the end of October.
Okay.
And we also have Coke Brandon, which has been down for planned maintenance for several months as well, and they're just coming back up now. And Coke Brandon's a monster when it comes to liquid fertilizer production.
Yep.
So with Brandon being down as long as they have been, that's going to put a lot of pressure on liquid product availability from now through spring. Economically, we just can't bring UAN out of the U.S. It's not concentrated. It's 32%. We got to bring it up here. We got to cut it down to 28 so that it
Yep.
stores over the winter. And then we just look at the freight costs of bringing it up. You just can't do it. So we're kind of at the mercy of Western Canadian production on UAN. That product's just going to be just tight, snug for now till the end of seeding, just due to that
Okay.
turnaround at Brandon.
And I think globally, UAN, they talked about being fairly tight as well. So that's just not a Western Canadian issue.
No, the U.S., they were empty at the end of seeding last year,
Yep.
as little inventory as they ever had. And then, we're still having effects of Europe being shut off of production due to high gas cost due to the Russia-Ukraine conflict. So,
Yep.
you
Yeah.
know, Europe Europe's created a bit of a void there as well. So I just see UAN well, all liquids being snug from now till spring.
Okay. All right. Now, what about NH3? What about putting down some juice this fall? It's a little like it's very dry in my neck of the prairies here. I don't know. I haven't seen any action. I haven't driven that much, but I haven't seen any action out there the last couple of days. Are you thinking there's going to be a pretty heavy application fall here, or is it a little too dry out there?
I think if you looked in central Alberta, you would say it's a little bit dry.
Mm-hmm.
But it's such a small segment of the fall application market. I had the privilege of driving out to Archerville, Saskatchewan last weekend. And as you go east, moisture conditions get better and
Mm-hmm.
crops look
Yep.
big. I mean, I have never seen so many grain bags in fields as I did on that trip. So it looks like most of the prairies are probably teed up for a fairly normal fall application of ammonia. And I would say ammonia
Mm-hmm.
is going to be snug this fall, due to Nutrien's outage at Redwater. They've got to get that plant up and firing and producing ammonia to fulfill some of their obligations this fall. So
Okay. All right. Okay. So we've seen a little bit of a softening in urea values here. I would call it, at one point it was about a 5% reduction from the high that I had seen. It's a little bit more of a reduction from that. I see it being cool, a little quieter on the planning side today. But is there kind of an opportunity here? Like if the retail side's quiet, values have pulled back here. Is this not an opportunity to at least consider getting some business done, in your opinion?
I do. I think in the next 30 days, it's a good opportunity to take a layer. Um,
Mm-hmm.
it's uncertain times globally, right? Low
Yep.
low grain prices, high fertilizer prices. Guys are minding their pennies, and they should be. Uh,
Yep.
I would say when I look at last year, we got into a logistical pinch because of grower deferral, retail deferral. We saw urea prices spike to $1,100 by spring. If this deferral continues from the retailers and the growers, things will flip as far as now we're into a logistical market and we're going to see a price run up again by spring because there's just a massive amount of product that has to move within a finite period of time.
Yeah.
So I look at it this way. If you miss the absolute bottom of the urea market by $30 a ton, that's going to cost you $3 an acre. If you miss the urea market by $200 a ton, it's going to cost you $25 an acre.
Yeah. Yeah.
So if I'm a farmer, I'm stepping in now and I'm taking a layer. I'm taking a 30 to 50% layer on my urea. And possibly, depending on cash flow, looking at snugging that up before my year end, if that's what I need to do, or waiting maybe into the new year. But after that, I just see this market being extremely tight because of lower production in Western Canada than we had a year ago. And Western Canada was a net importer of urea a year ago, where we used to be an exporter of 1 million tons a year. That's just kind of the shift on run rates, grower demand, preference of product. As we get guys switching out of ammonia into urea, we see more demand there. I think at the end of the day, by spring, we see higher urea prices than we do today, and likely significantly higher.
Yeah. Yeah, I get it, right? At some point, not buying, retail not buying, farmers not buying, it does flip when you say, well, I'm going to farm next year. I'm going to put in all these different acres and I need this product. It's just, you have to get it. So there's only so much time. We're
being punished in Canada a couple of ways. We have still a 35% tariff on Russian fertilizer coming into Canada. And Russia is one of the only countries not tariffed by the U.S. right now, whether it's a reciprocal duty or a countervailing duty or so forth. So 60% of the urea available on the river in the U.S. is Russian origin, which disqualifies it from coming to Western Canada. So when you see a price on NOLA, you're not sure of the origin. And right now, it seems like some of our traders that are quoting us on import tons are charging a premium for non-Russian tons.
All right. Yep. I was going to ask this, James, and I don't know if this is appropriate or not, but I wanted to bring up the carbon tax. And this is just kind of coming off the dome here, off the cuff. But I was chatting with a gentleman and they just like fertilizer. When we get our bill for fertilizer, there's no carbon tax on that, right? But is there something in the like the carbon tax being applied somewhere else, like that is trickling down to the farmer? Like obviously in freight and stuff like that, but is there somewhere else that it's coming through?
No, I don't think so. I mean, Western Canadian producers typically only can charge whatever the import number is they're competing against. So, the Western Canadian producer they're eating the carbon tax because they can't pass it along because they're, a dealer's not going to pay more for a carbon tax product than they can import it for. So the Western Canadian producer has to be competitive against imports, whether that country has a carbon tax or not. So,
all right. Okay, appreciate that. All right, let's talk about some other products now. Let's talk about phos. That's been an ugly one from the buy side for the farmers for the number of years now. But what are you seeing on the phos side? Any reprieve coming? Any change in that in those price dynamics?
It sure doesn't feel like it. I mean, phosphate is a product that's just tight globally. You go back to China. China used to be the world's largest phos exporter. They've cut 5 to 6 million tons of phos exports out of their book. They're really focused on conserving their phosphate rock reserves for the future. And then there's additional demand in China for phosphates in battery production. So that's a real reason why the world is so snug on phosphates. You couple that with India, falling behind on their purchasing of phosphates for a number of years, are really having to play catch up now, trying to rebuild those stocks because farmers can't just keep applying nitrogen-based products to grow crops. They're mining their soils, obviously, and they're going to run into a deficiency there. So we've seen an urgency from India to be purchasing. That's, two strikes there. Third strike seems to be that North American phosphate production, which is mainly based in Florida and the Carolinas, with Simplot having a bit of production in Idaho. North American phosphate run rates are below 60% for the first quarter of the fertilizer year, and that's really snugged things up. Then you also have countervailing duties and reciprocal tariffs on phosphates coming into the U.S. It's really just a recipe for high prices, unfortunately.
Yeah. All right. Well, if you see some positivity in that one, let us know. All right. Let us know. Because I think I was doing crop rankings for 2026, and of course, this year didn't look good either, and many got the yield to change their financial picture for 2025. Maybe we'll see that in 2026 as well, but it's certainly tough out there. All right.
Yeah.
What about sulfur? Any changes in that market lately?
Yeah, we've seen raw sulfur prices unfortunately increase globally as well. So, a double whammy here. Ammonium sulfate prices are likely firming to going higher. And also sulfur is an input product for phosphate production. So as far as phosphate production goes, raw sulfur to build sulfuric acid and ammonia are two key components to building phosphate. Both of those have seen increases over the last month. Phosphate producers have realized, $30 to $40 increase in production costs because of those two inputs. That'll translate to ammonium sulfate staying where it's at, if not heading higher. So.
Okay. All right. And my last one here is just potash. That old reliable, right? Potash is fine.
Yeah, potash is fine. I mean, I guess you could view it as probably the best priced nutrient available to farmers right now. Western Canada, it's not a major nutrient for us like it is in the US, but they definitely see phosphate application rates getting cut in the US to the 10 to 15% rate. That'll probably translate to potash as well. We're not going to see any collapse in any of the products, but potash is very well priced today. Likely seeing not a lot of price change in the near future on potash.
All right. So my last one for you today, James, it's just, over at Crop Management Network, have you guys done any research or spent any time just looking at, correlation between the grain pricing environment and the fertilizer pricing environment? Like when you get to a level of low prices like we're experiencing here on the grain side, do you guys have any research or anything you've looked at that says, hey, in 12, 18, 24, 36 months, that has an impact and lowers fertilizer prices? Is there anything out there like that?
I could say in the past you could correlate the price of nitrogen to a bushel of corn, and you could correlate a ton of phosphate fertilizer to a bushel of corn. Those have really seemed to decoupled right now based upon demand, and eventually low grain prices will curb demand in some areas. But if I could kind of take a bit of a left-hand turn, growers are going to get in the U.S. are going to get a substantial subsidy here, announced likely this week to the tune of $10 to $14 billion, right?
Yep.
Mostly directed at soybean farmers. That likely will go towards, whether it's machinery, input, something, right? The growers are going to put that money to work. And that's probably going to artificially keep fertilizer prices high. I heard a number of the total farm bill to U.S. growers this year, close to $40 billion from the U.S. government. Crazy number. So as long as you have those type of things happening, other places in the world, like India heavily subsidizes their growers on fertilizer prices as well, right? China, they control fertilizer prices for their farmers as well. So when you have governments interfering in free markets like that, high fertilizer prices are unfortunately affected by those subsidies flowing into the growers.
Yeah, that was one thing that has been on my radar the last few weeks as well, is just another cash injection and what that does that ripple effect. And don't get me wrong, James, this isn't like a blanket statement for everybody across the prairies, but if I think about even our own farm, like I said it on the show all year long, like we had a goal of $6 million. Like that was, $600 an acre. That was our goal. And we were nowhere near that, the way things were looking in July, right? And it was getting better, but we were nowhere near that. All of a sudden, it was 2 weeks ago, I started doing the math on, where we need to finish our canola marketing, and we're here. And not only that, but we have a path to higher than $600 an acre on our farm. And I think a lot of farms across the prairies, can kind of relate to that. Not everyone, but a lot. And so for us, the planning stage for 2026, like, it's not like we weren't planning, but it feels a lot better now than it did a month ago or 6 weeks ago. And so I think farms across the prairies need to, kind of think about that as well, to say, hey, maybe I did pull off a pretty nice 2025 here from a yield perspective. Let's rock and roll and tackle this beast for 2026 and get after it. So the U.S. is getting, there's a different thing. Subsidy from the government's way different than a good year, but I'm just trying to say that cash availability is better now than what we thought it was going to be a few weeks ago. So
It is. And, one of the things that we hear anecdotally is that, we're going to cut back on fertilizer this year because grain prices are low. And you're not going to save yourself out of this environment. The way you're going to save yourself is grow the biggest crop you can. And you hear that from the U.S. Growers in the I states right now, if not a record crop, a near record crop. So some of those guys are going to be banging out 250, 280 bushel corn. They're not going to be cutting back because they know they need to grow as many bushels as possible. And I see the crop that we removed here in Western Canada too. And it's hard to believe that there's going to be a lot of nutrient reserves in the soil. You might cut your phos back 5 or 10 pounds for a year. We've been not replacing phosphate removal forever in Western Canada. You grow a 50 to 70 bushel canola crop and you're putting 35 to 40 pounds of pea down with your crop, if that. There's not many guys doing more than that. But you're at a 20-pound deficit there already. So I don't think cutting fertilizer back is the answer in this scenario. And I'll probably get a bit of hate mail about this because we're sellers of fertilizer. But I'm a firm believer that, you need to grow as many bushels as you can in all times, but especially when prices are low.
Well, and I'll pair that up with you as well, James, because from where I've sat in this space over the last 15 years or so, I call it like full send. Like let's get after it, go for the biggest every single year, because you need to get those bushels. You need to get all the bushels you can get in this environment. And I was telling my consulting clients last year, like, let's go for it. Like, let's figure out how to go for it and see how this works out. And, it's certainly helping. It's going to help them this winter and plan for next year. So definitely sensitive topic, but you're a no nonsense guy. Ever since you've come on the show, you've told us straight as it is out there. And the listeners certainly do appreciate that. And I know it's tough. It's tough to look at next year and try to, create your path to profitability. But that's what we're all doing right now, trying to figure out that crop mix, trying to figure out how to tackle that marketing, how to save some money here and there. Where can we get more efficient? But that's good business. And we should be doing that each and every year anyway. So, yeah. All right, James, anything else you want to add before I let you go here? Certainly appreciate your time this week.
I wouldn't mind your input in telling me where you view canola as where does it rank in profitability for next year's crop? Because from our side of the desk, it looks like canola definitely is near the top earners for the growers. And wheat does not look good for us. So, when we work that back to nutrients, we see greater demand for sulfur products next year than we did in the past.
Yeah, I think overall from a line across the prairies north here, I haven't done crop rankings that include all the specialty crops or canary seed or, some of the smaller acre crops. I haven't gone there yet. But canola ranks the highest for many farms, and flax is in there as well. Like flax would be a top one, but again, friends don't let friends grow flax, right? So yeah. So I think from a crop mix perspective, you're going to see that canola acre climb. It's going to bump up as high as it can for many farms, and then they'll try to reduce their wheat acres as best they can. With that being said, though, James, like I was able to lock in a scenario for $8 spring wheat for next fall, not far from Camrose, Alberta, and so not that $8 gets anyone excited, but man, if you told anyone across the prairies today, hey, you can lock in $8 wheat in the stuff that's in the bin, everyone would put their hand up and would take that. So, there are scenarios out there that aren't terrible, I'll say. But yes, canola, $650 is where November is trading for 26. We're $14 canola, 13.5 to 14. I'm sure we'll get a little rally yet, at some point. That's the crop that's going to pay a lot of bills again for 2026. So, yeah. All right, man. Well, appreciate you coming on the show. And if something changes, we'll get you on as fast as we can. All right.
Great. Appreciate the opportunity.
All right. Take care.